Have you ever wondered why so many people believe Bitcoin's value could increase over time? Is it just hype? Or is there actual mathematics behind it? Today we are going to use simple maths to explain Bitcoin's long-term direction and why it's important to separate Bitcoin's supply from Bitcoin's price. Let's get started, guys. First, Bitcoin's supply follows mathematics. Bitcoin's supply isn't controlled by a government or any central bank. Instead, it's controlled by mathematical code. The formula looks like this. Rn is equal to R0 multiplied by bracket 1 over 2 raised to power n, where Ro is equal to 50 BTC, the original mining reward. N is equal to the number of habits. R with small letter n is equal to current block reward. You don't need to memorize the formula. Just remember one simple idea. Every 4 years, Bitcoin cuts its new supply in half. Watch the pattern. In 2009, that's 2009, it was 50 BTC. Then, after 4 years, 2012, it became 25 BTC. And by 2016, it became 12.5 BTC. Then in 2020, it became 6.25 BTC. Then 2024, it became 3.125 BTC. Notice something here, guys. Each reward is exactly half of the previous one. That's called exponential decay. This time passes, fewer and fewer new Bitcoins enters the market. As time passes, fewer and fewer new Bitcoins enter the market. Why this matters? Watch on the screen. Today, miners receive only 3.125 Bitcoin for each block they mine. That means new Bitcoin is entering circulation much more slowly than it did years ago. Imagine a product becoming harder to produce every 4 years. If people still want it, or even more people want it, basic economics suggests that reduced supply can create upward pressure on price over time. Notice I said can, not will. Now, supply is not the same as price. This is where many people get confused. Supply is determined by mathematics. Price is determined by the market. Bitcoin's price can rise. Bitcoin's price can fall, even when supply keeps shrinking. Why? Because price also depends on 1. Investor confidence, government regulations. 3. Institutional buying and selling. Next is global economic conditions, and finally, or last but not the least, the market liquidity. That's why Bitcoin can experience large price swings in the short term. The next is the one direction that never changes. As you can see in the curve approaching 21 million BTC. Here is the math part, or the part mathematics guarantees Bitcoin can never exceed 21 million coins. Each halving reduces the creation of a new Bitcoin, and over time, new supply gets closer and closer to zero. That makes Bitcoin increasingly scarce. This isn't speculation. It's written into Bitcoin's code. Bitcoin supply has only one mathematical direction towards greater scarcity. Its price, however, depends on how much people are willing to buy or sell at any given moment. So, mathematics sets the stage, but the market writes the story. If demand continues to grow while new supply keeps shrinking, economic theory suggests there can be upward pressure on price over the long run. But mathematics alone cannot predict Bitcoin's future price, and that's one of the most important lessons every Bitcoin investor should understand. If you enjoy this lesson on the mathematics behind Bitcoin, don't forget to like, subscribe, share, and turn on notifications for more easy to understand financial mathematics videos from this channel.